We've been warning about chasing stocks of consumer cyclical companies where the consumer has flexibility in terms of its spending, where they can easily, adjust up or down. Starbucks is one of them, and they reported their quarter just earlier this week. The company essentially gave a pretty dire warning in terms of the state of the consumer, that essentially pretty flexible demand. So what we're seeing now is a stock price that, in my view, at least in the near term, this is more of an income setup I see for myself here, is getting to the point where it may be oversold for sort of a 1 to 2 week period. I'm not saying this is a time to buy the stock and it's going to start rallying 50%. Maybe for the long term, a decent entry point, but I'm really more concerned about looking for a consolidation phase here. Essentially, this is still a good company, but I think we're finally at a point where we're getting a more reasonable price where it may start to bottom. The stock dropped about 15-16% after earnings the other day. It's very oversold technically, RSIs, MACDs, you name it. Doesn't mean the stock can't go lower anymore. In fact, when the RSI bottomed in January 22, that's a stock where the stock only began to fall. But I think here, with that big down gap that we had, there's at least sort of a 1 to 2 week period where the stock might consolidate a little bit. So that's kind of what we're liking here. Hope it helps, and we'll see you again in the next video.